Hello, this is Bill Scheid from Applied Finance Research with a look at my top 3 favorite edges of the monthly asset allocation systems. So this is a list of some of the edges for the monthly asset allocation systems. It's not inclusive, but it's some of the most important edges. There are a lot of good edges here, a lot of powerful edges, but if I had to pick my top 3 personal favorites, it would be, first of all, apply systems thinking to portfolio management and asset allocation. This edge is enormous. It's enormous and it's easy to take for granted. For those of us who have studied or been exposed to the teachings of Dr. Van Tharp and Dr. Ken Long, systems thinking is the water we swim in, and it's easy to miss it. What water, says the fish. But don't underestimate the power of water. Systems thinking opens up a world not available to your average buy and hold retail investors, your mom and pop stock pickers, your Robinhood heroes, etc., etc. The number of people in the retail investing world and the buy and hold world who are applying systems thinking is not a big number. So systems thinking is a really powerful context when it comes to generating results. This edge is absolutely enormous, and it's very clearly apparent when we look at the results of these monthly asset allocation systems as compared to the S&P 500 or as compared to a 60-40 stock bond buy and hold approach. So this one edge alone, it can make all the difference in your long-term results and your long-term investing success. After that, I would say my next favorite edge would be that these systems can be applied to restrictive retirement accounts. So they can be applied to really even the most restrictive retirement accounts where often fund choices and frequency of transactions are limited. So for example, my wife is a university professor and the fund choices in her employer's plan are fine, but they're limited. It's a handful of mutual funds that follow the large equity indexes, plus there's a few bond choices and money market options. It's fine for what it is, but it's limited. Plus, when she rebalances, she can only rebalance at end of day prices and she can only rebalance once a month. So that means no swing trading and definitely no intraday trading. And despite these limitations, we've been running monthly asset allocation systems in her account for more than a decade and we're achieving outstanding results. I also know of other traders who are applying these type of systems to their government and military retirement accounts, which I understand are even more restricted, and they too are achieving excellent results. So my next choice would be that these systems are simple. They're very easy to understand and very easy to execute. They don't require chart reading ability, they don't require fundamental analysis, and they don't require complicated indicators. They also don't require trader discretion. These are mechanical systems, so that means that the rules are crystal clear and there's no second guessing yourself when your retirement account is at stake and you're feeling market pressure. These systems are simple, and simplicity is an edge because it reduces cognitive load, which is a major hidden cost of trading. It reduces stress and emotional decision making, right? The rules are clear, there's no second guessing yourself. Simplicity also improves trader efficiency, so that's less chances of making mistakes. And simplicity also reduces the degrees of freedom in a system, so that means that there's less chance of data mining, over optimization, etc. So those would be my top 3 system edges. To learn more about these systems, visit us at appliedfinanceresearch.com or click the links below this video. Thanks for watching and happy investing.